folks, Dan Frio here, the Mortgage Update, and today is March 2nd. Happy March 2020. So it was a wild ride today. So let me go over, I'm trying to do this every once in a while when we have a lot of news come out during the day. So I'm going to go through my milestones of things that happened throughout the day. Let's see kind of how the day transpired, and then let's dig into it a little more in detail. This number, 8, not a bad number. Pretty good. I'll take plus any time. But I'm going to show you how this was up like 40 and we ended the day up plus 8, and then what I did. And I'm a little off the cuff with some of what the analysts are coming out with, and I'll kind of explain my position and theirs as well. So let's get on to it. The market opened today, and let's get to the 9:30 post. And they started the day higher, up 242 points. Look at this, the MBS market, this number here, when the market opened, it opened up 41 basis points. That is huge, a huge number. What we're starting to see, though, you're going to hear in the news, mortgage rates hit a record low and all this other stuff. Rates haven't really moved much at all in the last week. Teetered a little bit lower. But like I was saying before, I think what a lot of the banks and lenders are doing, you have to have a certain margin. You can't do mortgages at 0% interest rate because there's servicing costs. There's a whole bunch of costs involved. So you can't do it, at 0 rate. It can't be. You're going to say, well, Dan, how about the negative interest rates effects in that? That's basically, what if you put your money in the bank, what those yields would be. But you're not going to borrow money at 0 because that's how banks and everybody make money. So that being said, so again, just watch because rates are easing a little bit. But if you locked a week ago, you might have a rate of 0.1 better, or in that range, maybe 0.2 on the rate. But they're not really going much lower. And it was funny, even when we opened the market in the morning up 41, there wasn't much of a deviation from Friday's close. Okay, so again, you're starting to see the yields dropping, or the price going up. I'll explain that in a minute to those newbies out there. You guys that follow me every day, you know what's going on with this. This is the price, the bonds driving down yields. So we'll dissect that in a minute. You go to I think these two updates were newsletters that I get. And then the PMI manufacturing numbers came in, and they missed by 0.1. So basically manufacturing sector there. The purchasing survey came in basically in line. It came in 50.7. It was expected 50.8. Okay, we missed it by 0.1%. So no big deal there. The ISM manufacturing index, the health of the manufacturing sector, again, that came in at 5.1. It was expected at 50.4. I'm sorry, 50.1, 50.4. Again, nothing to go crazy about. And again, a lot of these numbers are already factored in. Now the coronavirus is hitting more and more and more and more. And again, go back to my last few videos. We kind of throw a lot of this out the door because this is in the past. We want to look at what's going to happen in the next week, month, quarter, 6 months, half a year, and a year. So we're going to go through that as well. Construction spending still robust, increased 1.8. It was expected to come in at 0.6, so construction is still doing very well. Now, here's what happened. Let's go to here. Let's see if this shows the stock market. Okay, all of a sudden, midday, Fed came out and said they might cut rates. Now, the rate cuts are not just going to be with the U.S. They're trying to coordinate this with almost the whole world. China, Italy, Germany, France, all the countries. They're trying to make a cohesive cut all over the world, basically, to kind of curtail what this is going to, how the coronavirus is impacting the economy. That's going to be tough because just getting the money cheaper doesn't mean people are going back to work. People are buying. If there's nothing to buy because nothing's being made, you can't buy it because it's not being made. So I don't think this is it's going to be a cure, but it sure helped the market because let's see what happened in the stock market. Now the stock market goes up 778. Over here, we still have the MBSs up 41. Now, here's what happens. Stock market up almost 1,300. MBS is 8. Okay, so we started the day up 41, ended the day up 8. That's a dramatic reversal. Okay, that's why I'm taking the position that I am. So let's go and take a view of the charts. And I think, me personally, and I'm just going to say it as myself, is the coronavirus going to play more impact on the economy? Yes, it is. But is mostly everything baked in? I think so. And you see, again, here's a rally point that we had. And then here, this is when the coronavirus started to spread. Now this chart, that's crazy. Okay, so we created another top, another Fibonacci level. So our levels were here, and those who watch me, the Fibonacci levels are basically bumpers or guidelines put in place to put a floor in and a ceiling in when you have trends. So there's multiple levels here. We got one here, one here, one here, and one here. So at this point, this was our top. We hit it, bounced back, and we closed here. But again, we started the market up 40. So let's say let's put it in perspective. Let's say the stock market opened up basically in this kind of terms of 41 move is the stock market opened up 2,000 points and it ended the day flat. That's a big reversal. So what I'm trying to explain is the MBS market opened like it would be a stock market open at 2,000 higher and ended the day 0. So we lost all of that. And that's what's happening. So I'm thinking this is going to be a resistance level. Even if the Fed comes in and drops rates, I'll post tomorrow what the Fed controls. They don't control mortgages. They control the federal funds rate. So it doesn't have anything to do with mortgages. It does I'll take that back. It does on adjustable rate mortgages somewhat. In credit cards and everything like that, but it does not affect like a 30-year, 10-year, 15-year fixed rate mortgage. Okay, so what I'm thinking is, and again, I always say this: pigs get fat, hogs get slaughtered. I'm at the point I want to kind of cash out some of my money, as I was saying about the stock market, a month ago. So I don't want to become a hog. I'm happy right here with my clients. I think if we get a little bit of, it continues a little bit, we're not really going to see that big of a change in mortgage rates. Do I care if I miss out on a 0.1, 0.2 reduction in rates? Yeah, but I think we could come right back down into this range quick if there's any good news that posts out. And I don't want my clients to miss out. And I call them back and say, I could get you, 3.5, and now you're at 3.875. You'd rather me say, okay, you're at 4.5, I'm getting you 3.5, and say, oh, I could have got you 3.4, but I'm at 3.5. We missed it by 0.1, versus we get that reversal. So let's go here. The wrap is basically what I was saying. Is the Dow ended up almost 1,300. Here's this where we had a 35 to 40% increase in MBSs throughout the day, and then ended up 8. Down through here, it just kind of explains some of the viruses and stuff like that. This is amazing to see what's being affected by the coronavirus. $3.6 trillion in U.S. stock market decline. That's how much valuation has been dropped in 4 days. And then it goes through here. You could pause here if you want to check out some of these. I won't go into detail. I like to make this channel what's truly important to you personally. These are fun facts, but there really don't play a role in what we're talking about. Economic news, there's nothing out today. The only thing coming out to this week is the employment numbers. I think those are going to be tough because it's back-ended numbers, meaning it's a month back, versus what's next month going to be if the coronavirus continues to play havoc that it's doing. So yes, we want to follow this number, and the Fed's going to watch this as well, but they're going to watch it going forward, and a lot of this other stuff is what the Fed is watching. Okay, so that's what we got there. We went over that already. Here, let's go to the economic news, just so you know what's going on there. Basically, again, there's really not that much coming out this week. Construction spending, we got those. Bank of Canada, nothing. It's all jobless claims here and payroll and jobs here. So I'll keep posted on that. I don't really think this is going to play a major role in some of the stuff, but the Fed is going to be watching this to see if they step in and do something. Again, the euphoria was the Dow roared back, biggest one-day increase since 2009, so in the last 11 years. We had a big rally back. Again, the euphoria was because the Fed came in and said, you know what, we'll do whatever's needed to do to kind of put a Band-Aid on things. Again, I don't think, it's going to make money cheaper, but if there's nobody working to produce the products that you need, you can't buy that. So if China makes, half the products in the U.S. and they're not making, you can't buy. So if it's even cheaper, you're getting money cheaper, you still can't buy the product. So that's, I think it was a patch to stop the bleeding. You're going to hear all this news. Mortgage rates hit an all-time low. It did opening up in the morning. Then it closed again. We opened up 41, closed at 8. I'll explain that in a second. What I mean by that. Again, even a 0.05 reduction in rate still makes it, an all-time low. They really have not changed much in the past week. That's what I want to get through to everybody. So if you locked in, like I locked you in, say Friday at 3 1/4, they probably, you might get 3.2 now today instead of, you're not going to get 2.75. They're just going down in little increments, if anything. And then, again, here's where stocks jump on Wall Street's looking to the Fed to offset the outbreak. Okay, so that's basically that piece of it. It's saying, the Fed's the one that came in and basically said, okay, let's stop this bleeding. And I think it was more of a PR thing than anything. Are they going to come out and do something? Yeah, probably. Is it going to really affect a lot of stuff? No. And that's my take on it. So a lot of people are coming out saying, don't lock, continue to float. Again, I'm a pigs get fat, hogs get slaughtered. I'm comfortable with these levels that I think we capped out. We don't have much room, if any, for rates to go any lower. Telling you about myself, for those newbies out there, my name is Dan Frio. I do the mortgage update every night. This is a number we follow right here. It's the mortgage-backed securities market. This is the bond or the instrument that creates mortgage rates. This is it, not the 10-year Treasury, not the whatever. This is the instrument. So what we follow here is this is the price of the bond of the mortgage-backed securities. It's a bond that trades with mortgages. As you pay more for the bond, so this number is going up, you pay more, you get a lower yield on that investment. So if you spend more money on an investment, your rate of return getting back is decreased. So this is what's been happening in that bond market. These numbers are skyrocketing. So every time this ticks up, mortgage rates are getting cheaper and cheaper and cheaper because the price is going up. Okay, so that's why we follow that number. Like I said, you're going to hear from people saying, this uptick is phenomenal. Well, yeah, the stock market was going phenomenal too until you had 2-3 days where you lost thousands of points and all this in valuation. 3.26 trillion in valuation. So I'm again getting to the point where I'm happy with where we are right now, and I locked in quite a bit of people today. So what I do, I'm Dan Frio. I do the mortgage update every day. You can hear me if you're in Chicago. I'm on 2 radio stations. I am on WYLL Radio Chicago. It's a Christian radio station. You can hear me every evening, Monday through Friday, from 7:30 to 8 p.m. I am also on WIND Radio Saturday mornings from 7 to 8. So if you want to check out those shows, you can tune in at the time or go to themortgageupdate.net. So themortgageupdate.net, not .com, .net. And you can get all my shows and everything there. But also on YouTube, everything. Go to my channel, The Mortgage Update with Dan Frio. You're going to see every one of my shows up there, and you can check it out there. Please, give me a thumbs up on the videos, especially this one. Make sure you subscribe down below. leave a comment. I reply to everybody's comments. There was one last week. Somebody said I didn't reply. I apologize. There was a glitch in the system at that time. I did reach out to that person. I'm working with them now, I think. But the best way to get me, there's two ways. Call me, 844-775-LOAN. That's 844-775-5626. Or email me at Danny, DANNY, .Frio, and Frio is FRIO. So Danny.Frio at preferredrate.com. Or you can also find me on the web at thefrioteam.com. Just Google search Dan Frio or the mortgage update with Dan Frio, and I hope you like what you find. So, took up enough of your time this evening. I hope you learned something. If you did, let me know. Let me know how you're doing on the channels. And also, let me know if there's something you want me to cover specifically, like when the Fed drops rates, what happens, what is an FHA loan? Is there first-time homebuyer programs specifically here and there? I do almost the whole country now. There's only a couple states that I can't do. So the licensing has been expanding over the months, and I'm at about 39, about 40 states right now. So I'm missing a few. So reach out to me. I'd love to help. God bless. See you tomorrow, same time, same place. See you then.